What is going on, everybody? Hope everyone had a great Christmas. We are going live before this upcoming week. It is a full week. New Year's Eve, I think, is a full day across market trading. So don't have a short week like last week, but we're recovering some of the stocks we're watching this week going into this week, which historically is one of the stronger weeks of the year. This is actually historically like the Santa Claus rally, technically, is that week between Christmas and New Year's, okay? So as we speak right now, we are looking at futures across the board. They're green, tech up just over 0.25%, but outside of that, not notable enough because this could change like that. So it's not notable enough, at least in my eyes, for us to kind of take any, to give as much weight for now, but we'll see what happens. This could all change dramatically based on a literal press release or some piece of news, something that breaks overnight. Who knows, right? Or it could just change dramatically tomorrow. So we'll see. We got to talk about what's going on in the market because we are sitting at a pretty interesting spot, and I wouldn't be surprised if something happens this week, but we got to make sure we're aware of that, so we'll talk about that. But hope everyone had a great holiday. Coming from a hot, almost, it's not super hot, but it was like 80 today here in Austin, Texas, so it's definitely not cold and snowy. I do miss it, but at the end of the day, I have to say, coming home to the warmth is you can't beat it, honestly. I'd rather take trips, vacation to the snow because I snowboard, so that's fun, which I'm going to be doing in about a month or so. But coming home and living where it's warm, honestly, being in shorts and short sleeves all the time is fun. It's not going to be like this all the time here, but for now, I'm making sure I can make the most of it. Right? Didn't go to the pool today though, which I probably should have done. All right, so that said, let's pull up the account right here. Let's pull up Webull and let's go and take a look. I'm gonna go big chart so we can get everything like huge, just big charts on the screen. That's what it's all about, right? So here we go. Really interesting thing on SPY. Here's the S&P 500. I want to pull this up, and I am sorry because for those who are watching this, maybe after the fact, even during, I wish I could make the ticker symbol bigger. I wish I could, but it is up in the top right. Unfortunately, it's also up in the top left of all like the little widgets on the screen. But here is SPY, the S&P 500 ETF. We are right at resistance, okay? So we have to make sure we understand this going into this week, that yes, while it's historically the strongest week or one of the strongest weeks of the years of the year in past history, right? We are literally at resistance. So ever since the 5th of November, we came up into this 470 to 472 3 range, and we've gotten stuffed every time, okay? So this is key to see where we end up going into tomorrow. I would not be surprised if we just cleanly break through, go to all-time highs on the S&P, and we have a run towards 500 into next year. Who knows? From where we are right now to $500, that would still be about a 6% move, which on the grand scheme of things isn't that much. We could totally get a 6% move in the overall stock market, right, into January, maybe even February, be at 500 or so come, at some point in the first, 2 months, 3 months of the year. And then, we're only up 6%. So the average return is like 8 to 12% on the S&P. Yeah, we're really ahead of the schedule, but if we, get a pullback next month or two or next couple months, we kind of chop around, it's not that unrealistic to see a 500 on SPY. So that's kind of what I'm thinking is like a magnet level. I think it's a very big psychological level to watch. So we'll watch. Now, of course, that said, this being one of the strongest or one of the stronger weeks of the year, Santa Claus rally, everyone kind of feeling good, right? People are home thinking that thinking that they want to have some fun, maybe start trading if they're home from work or whatever, right? Or get back into the game with some Christmas money, you know what I mean? That type of thing. The problem with that is that with everyone thinking that way, you got to make sure you're ready for the backside. So we had 3 very strong days to finish out last week, so make sure we're ready for the backside of this, because if we don't break through and we get rejected here, we can easily come back down to that 465, even 460 range very, very fast if we don't break out this week. So that's something to make sure we're paying attention to, at least monitoring, right, going into this week. I do want to pull up, I want to talk some small caps. I have a pretty decent list that is developing, so we'll talk about some of those. I do also want to talk about some of the big name stocks that are kind of leading the indices, so make sure we at least have a good feel for how those are setting up, so that we can kind of get a sense for, where the market may kind of push if we have some more range on some of the bigger names. For example, let's see Apple. Let's look at Apple first, and then we'll kind of go from there. So I'm going to start there, and I got to make a new list, or at least I have this. This is my December list of small caps. We'll pull this up in a second here, but here's Apple. So Apple's about, let's say, about like $5-6 off of its all-time high. So from where it's at right now, yeah, about $6, about a 3.5% move away from its all-time highs on Apple. So it's still a decent move, but it could happen this week, right? if it stays strong. Now, I think it's another important thing to note too, that let's be realistic, right? Now, what's happening right here on a lot of large caps, here's Apple's chart over the past couple of years. Go back to the left, we're talking 2017 toward the left side of the screen, and we're talking present day on the right. So an absolute explosion, really, since things kind of got better right after the pandemic crash. And I think it's because we've seen a lot of, uncertainty. It's kind of like the risk off type play, and people were buying stuff, and inflation and spending money and all this good stuff, right? Whatever. Apple did quite well. At some point, these big names are going to pull back, and they're going to probably pull back substantially, or at least cool off substantially, where they're not going to have the type of range that they've had. Take a look at these. These are weekly candles on Apple. Go back to 2017. Scroll back to the left here. Look at the range on these candlesticks, guys. We were not talking about the range that we're seeing right now. We are seeing some wide range. And so those who trade options, who trade large caps, there is so much fun. There's liquidity, there's movement all day long, and there's a lot of money to be made up and down, right? But my caution to that is that that's going to end at some point. And so we've been seeing, at least I've noticed personally, like in the community, if you want to call it that, right? Twitter, just trading community in general. A lot of people who made a lot of money, who did well in small caps, they have transitioned to playing large caps, and a lot of them are at their wits' end. They're like, hey, I'm done with small caps. I'm just going to go play my large caps now, and that's it. The problem is that there's a lot of people doing the exact same thing, and there's a lot of people who are making that shift as we speak because of how small caps have been. How they manipulated, there's not been much volume, there's, it's very difficult to kind of get the feel for small caps compared to, let's say, last year, and then really even compared to, years in the past. It hasn't been the past 6 months or so the same, right? So my caution is that at some point when the tide turns, then all of a sudden Apple goes from moving, 2% every single day up and down, giving us a 2% range to trade off of amazingly for those traders. All of a sudden Apple's making 0.5%, and Apple's only, moving, $1 or $2 a day max. It's not making these wide swings where if you go back to the daily chart now on Apple, right, look at some of these days. I mean, Apple opened up at 181, or it hit a high of 181 back here on the 16th. And then it ended up finishing and hitting a low down towards 170. Over a $10 range. I don't think we're going to see that type of range on some of these large caps, forever, right? So a 6% range intraday. I mean, that's wild. That's just wild, especially with the weight that Apple has on the S&P. That's a huge pull. So that's something I do want to at least caution, at least going forward. But some other names that have some momentum, that have been some solid growth plays as of late. AMD kind of breaking up over here. If it can hold over 145, that's a good sign. So AMD could be, with a strong market, a nice swing, or a swing to ride the 50 SMA. So see this blue line right here? That's a 50 SMA. I would say that, from where we are right now, risking about 5%, you're about 5% off that 50 SMA. Risk about 5%, could be a trailing stop loss or something like that. But this could be a decent play back up into that 150 plus range, potentially all-time highs if we have a strong market into the beginning of this year. So it's an idea there. Breaking below and closing below the 50 SMA 2 days in a row, that's probably like my trigger to get out of that trade if you were looking for something like that. So it's something to watch for sure right there on AMD. Outside of that, I do want to look at Amazon, because Amazon is an interesting one too. It hasn't really moved as much as a lot of these large caps have moved, and it has some pretty decent weights in the overall S&P, right? So we broaden things out here on Amazon. I kind of have this little channel. Here's your channel. Amazon did kind of hold the bottom, not the exact bottom, but it did kind of dip down towards the lower half, up towards the lower side of the channel here, below halfway for sure, and it bottomed out down around 3,300. So Amazon right here would be a play that I'd be looking at, a potential swing into the end of the year, with a rough stop loss here at these lows right down around 3,300. So if I'm looking at that right now, that's about a 3.5% move or range down. Looking for a move back to the top of the channel from where we're at right now, that would be roughly about a 9% move to the top of the channel. So let's say you're risking 3 to 4% to make, 7, 8, 9, that's pretty good in my eyes. That could be another idea too if you're looking at even some in-the-money options to play there, or even out-of-the-money options too. A little bit riskier there, obviously, but with that type of range in mind, these are kind of the large caps, at least I'm watching, to kind of give us a better feel for the overall market, how things are doing across the board there. I do want to look at QQQ. Let's look at tech. And then we'll talk IWM. We'll get into small caps here in a second because I do want to make sure we talk about that because there's a bigger story there too with some of the small caps this week because it's historically a pretty good week. And I'll explain a little bit why, right? So QQQ right up at resistance right now. 400 is a key area to break through. If we break through that 400 on tech on QQQ, we should be right in line for all-time highs. 408.71 was the prior highs there on QQQ. Held supports pretty nicely this past week, and that was that. So last thing I want to look at is IWM. Targeting on this IWM up to 227 to like 229 is kind of where I'm targeting on IWM. This is the Russell 2000 looking at small caps. It bottomed, or at least for now, we kind of have a bottom right there. It pretty much the exact same spot we've seen this year. So we hit lows that we haven't seen since March, which is pretty impressive. Think about this. You go however many months it is, 8-10 months almost, and we hit lows we haven't seen since March. And even then, right, you go back to March, we had some pretty wild days back in then, but each of those times was bought up heavily, and yet again, we saw that happen again, right? We saw a very nice bounce off the lows. So from the absolute low, not saying that anyone's perfectly going to time this, but from the absolute lows, IWM is up 6% within a week, right? So it's a pretty impressive bounce for now. We'll see if that holds up, and we shall see. Obviously, it's been interesting. It's definitely looked a little weak, and then it kind of showed up with some strength this past week. So we shall see. All right. DC, can you look at Hut? Yes, I do like Hut. Hut's an interesting mining play. Let's pull up while we're looking at some. We're looking at small caps, the Russell 2000. Let's look at Bitcoin. That's something that I do want to also mention too. I'm glad that you reminded me there because Bitcoin is kind of doing its thing. I'm very interested to see what happens. I wouldn't be surprised if we you wake up tomorrow morning and all of a sudden Bitcoin runs. It's something we kind of seen before where it has a nice finish of the week. The weekend, everyone's super excited about the weekend because, okay, the market's closed, now what? Everyone's going to flood into crypto and it's nothing happens. And you're like, wait, what? And so when that happens, it's kind of disappointment. And then boom, all of a sudden Monday hits and it rips, right? So we've seen that happen before. Or also all of a sudden Monday hits and there's a massive dip, and then El Salvador is there buying those dips, right? It's kind of something we've been seeing. El Salvador has been just literally buying just dips and I wouldn't say laughing, but talking, posting the leader of El Salvador. I'm not sure what they have, what it's necessarily called. Not president, whatever. But he's been posting on Twitter hey, we bought the dip. We just bought X number of Bitcoin on this recent flush. They did that here on this flush right here. So they're up. Hey, they bought the dip and they're up from that buy. We shall see how it pans out for them. I'd be a little discouraged if if this was the top and we kind of fall back off to the downside on Bitcoin for the next year, because it's going to be kind of a tough. They're going to be feeling that for now. Long term, I think they'll be okay, but we shall see. So breaking out of this downtrend here on Bitcoin, I do want to see this thing kind of holding up, and we'll see where it goes this week. Low 50s, about 53 to 54K is my next target there. But if this holds up in the 50K plus range this week, I think we're going to have a nice little week for tech plays, some of the miners as well, as long as the market's decently, holding up. It's not if the market's selling off, then that's a different story, obviously. Here's Ethereum, okay, bouncing very nicely off the 3,600 support that we had. We had this line drawn in here, prior resistance, prior key level, drew that in, it's bouncing. I'm looking for that to get up to about 43 or so, and then potentially breaking out to 5,000 all-time highs is what I'm looking at there. Very, very strong chart still here, though, on this thing, on ETH, so we'll see. We'll see how this one holds up going forward into the next couple of weeks. But it looks pretty good. Honestly, across the board, I can't say that it looks terrible. It looks much better than it did, 2 weeks ago. So there's that. Let's pull up Hut. Let's go into some of those stocks. We'll look at some of the miners. We'll look at some of the small caps now. I want to pull this up. So Hut, very nice bounce off the 200 SMA. I would say targets up into that 10 to 11 range are very, very realistic, especially if Bitcoin stays strong and tech stays strong. So Hut got hit pretty hard, but a bounce in Bitcoin could send this thing back up into that 10 to 1050. Now, of course, here's the thing. With these plays, it's very interesting to see how these types of things play out. You have to make sure you're careful, because you could play one of these things and obviously be like, okay, I'm going to hold this thing long term, and that's it. And maybe that's what you want to do if crypto, if you're obviously, a longer term kind of picture viewer on crypto and all that stuff, then great. Miners, yeah, long term, yeah, okay, makes sense. But you have to understand that if we do see, weakness in Bitcoin in the short term, well then, yeah, this is going to pull back, and that's what it's done from the highs. So again, this is going to bring more attention to it this week if Bitcoin stays over 50K, but we also do need to see Bitcoin kind of making a stride to the upside and not just sitting still at 50K, because if it sits still, then you're going to be kind of at the mercy of the market, and people may get in early 1 or 2 days where it's nice, and then all of a sudden it pulls back and then this thing gets crushed again. Next thing you know, it's below the 200 SMA, and boom, it lost momentum. So we got to see this curl continue, which roughly want to see like 750 hold now. So we got about $1.25, $1.50 or so of leeway, but roughly from here, we're looking like a risk from what we're at right now, risking this thing about 14% down for a move of like 20% up, and then that would be like a first target. Ideally, looking for a bigger move to the upside. For more targets higher, maybe up to that 50 SMA, up into that 1150 range or so. But again, with something that's that has the type of range, you got to make sure you understand that. So you could be down 10, 15% on a small cap position only for the thing to run 100%. Like sometimes that stuff happens. So make sure at least I don't want to be like sitting here and saying like, okay, paper hands, this and that, because that ends up causing a lot of bag holders, and that's the problem with a lot of people who play small caps, is that they buy something when it's way up off of lows, and then they think it's going to keep going, and then it doesn't keep going, lose momentum, and they sit there and they cry because they're holding a bag. Now, hey, at the end of the day, somebody made a ton of money. For example, somebody bought HUT down in here, sub 4, made a killing on the run back up to 10, 15. Now, there's also some people who bought HUT, at like 12, 13, and who are like, oh, I'm up, 20%. And now they're down 40%, right? So you kind of have both sides of that. Obviously, understanding that, hey, the stock is up a lot. If it loses momentum and drops under this specific level, for me, I'm going to get out and I'm not going to hold this back, right? That's the idea. Different story, in my opinion, when it comes to stocks that have been downtrending and hitting new lows, because that comes down to a due diligence standpoint, and also comes down to playing the small cap cycle, which is something I want to talk more about in a future video. But it's a pretty common cycle we see across small caps. They get beaten down. They have catalysts upcoming. They have a pipeline of drug data. Or they have this, they have that, whatever. They have some news. They drop a press release because they need to pump their stock up because no one's paying attention to their stock. They drop a PR. Stock pops up on news. If the PR is written well, it depends and how much it can send it. Or if the news is actually good, if it's positive phase 3, FDA approval, right? That's good stuff. That could send these stocks up, pump them up 50%, 100%, sometimes more. Drop an offering, raise capital, stock falls back off. And then again, everybody forgets about it. And if their drug or this or that, right, wasn't phase 3, or it wasn't an FDA approval, wasn't like super big deal, and there's a lot of competition, and then they have, a lot of issues in terms of expenses and whatnot, their stock's going to fall right back off, and then the same cycle will repeat, 6 months later, 3 months later, a year later, right? So the same type of thing happens. So if you're buying dips at 52-week lows with a plan in place, selling into the next spike, selling into the next earnings report, selling into the next, data release. Now, of course, if you're going to hold it for a data release, hold a stock for a data release, that's super risky, but that's your catalyst. You're playing for the data release. So, hey, either it's going to happen or it's not. And if I'm playing a run up in anticipation of that data release, I'm going to sell on the way up. And if I'm playing for the data because I believe the data is going to be good, that is absolutely my risk. I'm going to make sure I'm not risking my entire portfolio. I'm going to risk X% of my account that I can afford to lose if the data is bad. And boom, then I can go from there. And if it hits, it hits. And then you kind of play it that way. So there was a stock, I believe it was ALK, that had some bad data this week. Look at this stock. Here's a perfect example. Now, this is a higher price stock to begin with, but now look where it's at. So now it's a market cap of 67 million. So it went from I think a $4 billion market cap to a 500 because they had one main drug in trials, and then they pretty much had bad data or stopped their trial or whatever they had. The thing was at $85 and it fell to 10 and it actually fell down to 8. So yeah, dropped like 90% in a day. So, that's the risk that you have, when it comes to playing or holding through data or with small caps. Now, this is a different story, but you need to make sure you know what you're doing, what you're holding if you're holding a small cap. So yeah, that's kind of the deal. All right, let's see. SEAC. Let's see. SEAC. The only problem I have is I believe this stock. Here's a problem. Now, nothing against this stock at all. You want to see it continue to hold up higher lows. So kind of the key areas have been roughly this like 175. It was a prior resistance, now holding support. So if 175 holds up, that's good for SEAC. Below that, down to like 150 or so. The problem is, again, this is up a lot, right? So these merger plays, this thing was up over 400% from the lows to the high. Now, I haven't done any due diligence here because it's just chart-wise doesn't interest me personally. It's not like my favorite type of play. But what was the same thing with BBIG? It was the same exact thing, right? Didn't they have like merger talks for like however long? Just make sure you understand like the potential of the downsides here, the backside of these trades, because look at this. BBIG, right? Same deal almost. This thing went from wherever it was down here under like 250 to $12. It went 460%. Very, very similar percentage run to SCAC. And then when the music stopped and the momentum faded, right? And there was a lot of people who bought this thing up over $10. A lot, right? Got super pumped up, hyped up. There were people who were making, just video after video. I remember seeing on YouTube about this stock, kind of following it like almost like an AMC, kind of bringing the cult crowd into it. And the thing fell off, and then it bounced from sub 5. It had a nice little rebound there. That was your kind of mercy exit right there to get out. If you were bag holding this thing and you averaged down, it had 100%, almost an 80% kind of little run there in a week. And then the thing is now from its all-time highs, or from wherever the highs were this year, the thing is now down to 75%. So make sure you're not caught holding a bag like that, because if it does dump off and people forget about it and momentum fades, well, you can cut this thing. For example, I would have cut BBIG under $10 if I was holding this thing over 10, or I was holding it from a lower average and I was ratting shares and it gets over 10. Hey, this thing drops under 10. I'm probably going to use that as my stop loss. Okay. It closes under 10. I'm going to get out. And if I did that, yeah, maybe I got faked out kind of right here in this candle, but it ended up closing over 10. So I would have stayed in, and it ended up closing under 10 the next 2 days later. It closed under 10. And then guess what happened after that? The next day it was down the 7s. And then within about 2 weeks, the thing was down the 6s, then even 5s. So you could always re-enter these things lower if momentum fades off like that. So make sure you're paying attention to that. And the way I look at that is just looking at key levels holding. Okay. So looking at this stock holding up, let's look at the 1 hour chart here on SCAC. Look at it, right? This 175 held up. It had this pop, boom, pulled back, and that's where it held. Now it hit this 346, and guess what? It's right back at that key level again, 175. That holds, boom, this could signal the next leg. Now also, again, same deal here. The stock kind of had this initial move, right, from the 70s or whatever up into the 170s. And then what did it do? It consolidated. It held up for like a week. It didn't die. The thing didn't die. And so when a stock doesn't die after a crazy move, a small cap doesn't die after a crazy move, that's setting the stage for a squeeze, right? Because those who are shorting this thing either get impatient, they end up saying, yeah, whatever, it didn't die, I'm going to cover. And then it starts to kind of interest the more experienced traders, the bigger money, because they say, hey, this is holding up, this could squeeze. And the big money traders, the more experienced traders are watching for these types of moves. And it's something that I want to get better at too, because I personally, the way I like to swing my small caps is buying the bottoms, buying out down towards supports, down towards these new lows, whatever, buying the final flushes with catalyst, with some due diligence that I've done. You don't have to do any due diligence outside of knowing if there's a threat for an offering for some of these momentum swings, because if I'm watching something that ran 2 days ago, 3 days ago, and it's come back down, but it didn't die, that thing is still holding up and it's not dropping below, let's say, a certain level on a chart, then that's kind of my signal to maybe get in this stock, use that as my risk for a swing. And you could do very, very well. And those are, generally short-term swings, and they're momentum based. So you can kind of use momentum to kind of guide you. It's something that I want to do better in 2022 and kind of get a better feel for some of those. But it's not my bread and butter. It hasn't been in the past couple of years, but it's something that I want to kind of get better at, because I think there's a lot of value there, right? A lot of money to be made. So Dbtx got in the day. Yeah, I love Dbtx personally. It was one that I have on my list. It's high on my list. It's actually one that I'm going to be getting into. I had it and I cut it, I think, somewhere in here. I forget when exactly I cut it, somewhere in the past like week and a half, 2 weeks, because I was like, hey, this thing can easily drop down lower. And I was looking at a lot of small cap charts. I'm saying to myself, you know what, this is, this has this kind of flush off, and who knows where the bottom will exactly be, but it had that kind of flush look. Now look at DBTX. So on this flush, what are we noticing? Volume increasing. Okay. The thing is sitting here under $5. I think under $5 is a good spot. I think we can see targets to the 50 SMA up towards 690, 200 SMA up towards 8. I think this could be back at my target originally was like $10 on this thing. So I think this could be a 100% swing. I'm not saying that it was trading at 24 on the IPO. Who cares about that stuff? I don't really care. I'm looking at this thing from, we have a float of like, let's take a look at the shares float from Webull. Looks like 20 million float roughly. We're looking at a market cap of 100 million. And I was looking deeper into their stuff. They have some catalysts out into next year. And so what I did is I switched this out for SON. So I bought SON because I believe SON had some shorter term catalyst. And then Dbtx has some catalyst, I believe, into second quarter of 2022, if I'm not mistaken. I forgot off the top of my head. So I'm looking at that. So like I'll be rolling my money outside of my next swing that runs. When I have more cash, I'm going to be rolling that money into this because this is a chart I absolutely love, especially bottom. I mean, this is obviously, you need to know what you're holding. You need to have a little bit of a sense behind it. But down here, looks like some volumes coming in off this recent flush out. I like it a lot. Let's see. Check out long natural gas, BOIL. Let's take a look at BOIL. Look at this thing, down right in here in this range. Let's take a look at this. Draw a little box in here. Look at this. Looks like it's trying to hold up into this range. We'll see. It did have a high volume day on the 23rd. Dipped down to 23.85. But you want to see, this is an oversold. Look at this oversold chart. I mean, I don't know. I don't have a huge picture view of this whole thing, right? But I'm looking at this chart saying to myself, this could be very, very interesting. Let's see. For a potential bigger picture swing. Now, I'd be looking to buy this thing, anything under 30 bucks. Honestly, in my opinion, looks pretty good. So I buy under 30 bucks, risking it down. Obviously, with making sure you understand the fundamentals driving natural gas and whatnot, right? But this is a buy, in my opinion. You know, be careful because it has range. So when this thing goes on its runs, this thing can make a 100% move from where it's at. I mean, this thing gets back up into that 50, 60 range. You're talking about 100 to 200% type of move. You know, back to these highs from here, that's 300% off. So the thing is down from where it was trading at. The thing is down now. How far? Let me get rid of that. Let me draw a little line in here. From the 97, it's down to where it was, 75%. Seems like that RSI has got to be, and we can pull it up here too. Let's pull up the indicators, look at RSI. RSI is sitting here, it's like right at, 32. So a sub 30 is really oversold. Every time this thing has gotten oversold, it has bounced. I mean, look at the RSI. This is a perfect example, right? You go back into here, looks like this time last year, you kind of had the RSI teetering on 30, and what did it do? It went from 19, hit up to 25. Hey, 19 to 25 is not something to laugh at. I mean, that's a decent return, right? That's 25% almost. So every time the RSI gets down in these levels, it has bounced, and we are right back at that level again. So again, be careful. It could come down, flush 20, maybe, who knows? But if it does, that could be a decent buying opportunity, I think. 6 inches of snow, but the sun will melt it by the end of the week. I hope. It'd be awesome to see some PRs on some of my small caps. I have to say though too, it has been one of the driest periods, at least for my style of swings, in a long time, honestly, probably ever, from what I can remember in terms of the PR front. I mean, we got on PRs, but they just haven't been runners. And that's probably just a product of the market too. Like I know that NVOS has gotten good PRs over the past couple of months, and it just hasn't run. It just is a stock that has not run. But eventually these PRs will hit, and the conditions will get a little better, and they'll run. SON is one that I like. Hey, of course, be careful on SON. I'm going to get rid of the RSI here because we want to be able to see this a little better. Okay, here we go. SON, I like this thing. Has catalysts, has data releases coming, I believe, in 2022. First quarter, they have some catalysts setting up too. And they talked about this in their last earnings report, so it's not like it's random. It's not like I just dug super deep. It wasn't that hard to find. I'm looking for that type of move on SON. Of a move, let's see. From where it's at, from these 52-week lows up into this range, and many times here's also part of the game, right? These types of games, whether it's big money, whether it's insiders, whether it's whatever it is, they always spike, and these spikes many times are opportunities to get the big money out. So somebody who is in from a much higher average with a large amount of shares, well, you kind of need this thing to go, and so eventually these things almost, I don't want to say they all go, but a lot of these stocks will go, they will spike, they will have their day, and so for example, SON had a big time period of downtrending. The thing hit down to, it hit down to like 60 something cents. Then it spiked up to $2, 200% run, and then immediately came right back down. So somebody unloaded, somebody was in from higher, they unloaded, and they made their money, or they kind of recouped some gains and they got out. And that was kind of the nature of that one. So I'm expecting a very similar situation here. Look at what's happening right now. Last time SON flushed, it was trying to hold up around $1. It flushed under $1. It dropped, 25 cents, and then it ripped, a 200% day. So Yeah, that's kind of how this stuff kind of goes sometimes. So I'm looking for the same type of idea on that. Now, hey, I'm not going to get greedy. If this thing hits 75 cents, I'm taking a lot of profits there, but I think we can see $1. I think it's not unrealistic to see that. And then I'd be looking to short it because they have to get over $1 by April. And if they can't get over $1 by April, naturally, they're going to do a reverse stock split most likely. And so I would look to be shorting the stock because when the news of that comes out, generally speaking, the stock's pulled back. So I'd be looking at that as a small short if we get the run. So, but I'm long for now. So we'll see. We shall see. AYRO, man. AYRO is just nuts. Let's look at ATER and then we'll look at AYRO. ATER is, oh, look at that. It had a little perk on on Thursday, I guess. It's trying to perk up. These are really good charts too. When you start to notice this stuff too, it's kind of playing this for the momentum. So if you start to notice a chart that starts to kind of pull down and it starts to hold up, the stock stops dying. It stops fading out and getting killed. This is an interesting idea to play these types of plays. Now play this thing with a stop loss here under like, $4. Yeah, it's not a bad idea, right? That's kind of how I would see this thing for a swing up to the 50 SMA up to about 6. I mean, it's got even further targets I would have up into, let's say, like the 7, 8, 9 range is not out of the question with some volume. So these are some fun charts to start looking at. AYRO, this thing is trading, I think, like below cash now at some point. I mean, I don't even know. Let's see. So they had the earnings report. Okay, cool. I was in this thing, but I stepped out because small caps just looked even nastier. I didn't want to be spread too thin. And then, as it is, I already have a decent amount of money in small caps. And so at the time, I was like, okay, I'm going to trim my positions down. And that's it. Their market cap is 63 million. Their float is about 30 million. I want to look this up because this is an interesting one for me. Seeking Alpha, I want to go to AYRO and I want to pull up, let's see. They announced the results of the annual meeting of stockholders and provided a business update. Let's take a look. Let's see. Record revenue driven by record unit shipments is expected for the fourth quarter. So this is an interesting thing to also note too. Now this is known, but when the time comes, a lot of people could forget, especially in a weak small cap market. When they come time to release their quarter 4 of 2021 earnings and they release that, keep that date in mind, okay? So make sure, that's something I'd be watching, right? Let me put this on the, actually, let me add this on the list. Let me just write this one down to make sure I look at this earnings coming up because this could be an idea. Now, I wouldn't be swinging it heavy, but this could be a swing into earnings because if they are expecting that, you could get a run up in anticipation of the earnings. And then also if you don't and the earnings drop and it's like 500% increase or 100% increase or this or that, the headline could read really well and it could spike the stock, 20, 30% just like that. And so you can be in for a nice quick little lunch money and run, right? Type of deal. Even if you don't want to be in this thing for the long term, right? So, I mean, personally, I would be looking at this one as a short term, play the volatility, buy this thing when it's at its lows. And as long as the fundamentals are shaping up EV space, this could be decent. I'm going to write down watch for record ER on my list for AYRO. And that's going to be quarter 4 of 2021. That'll be coming out in the next couple of months. Okay, CEO, blah, 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 supply chain disruptions. Okay, cool. Expects undergo process of shorting the sourcing of components. It's low split EV. Okay, cool, whatever. AYRO is leading in its cost structure to better align its expenses with its product development. Additionally, company will consolidate its Austin manufacturing and office footprints. Okay, cool. It wasn't really too much information out there. Okay, whatever. That was just one thing I wanted to look up. Now, if I go back on this thing, let's take a look. Yeah, their last thing was their results here. I do want to pull this is their third quarter results. So we take a look at their results third quarter. They had revenue of 500K, which is not good, right, on the surface. But it was up over 44% year over year. Now you're talking about EVs, and you want to talk. Let's go to finviz.com. Okay. And I'm just going to pull you guys some EVs just to show you some reference ranges. Okay, look at AYRO. AYRO. Oh, I did it again. Just because here you can get a lot of quick data when it comes down to just looking at some of the numbers, revenue numbers, market cap, and all that stuff, just to get a sense. Look, this stock has been downtrending massively. This thing was, of course, EV revolution, whatever, February crazy run, small caps went nuts. This thing was over $10. Yeah, now it's under $2. Okay, massive, and it hasn't had a relief. This thing has not had a relief. I expect at some point a massive run on this thing. Even if it's just one day, even if it's short term, it's going to be a relief run, I believe. So market cap is 73 million. Sales 2.7. So their price of sales is 27. Now, okay, that's not a great number. Obviously, that's pretty high. It's even red on Finviz. Finviz telling you, hey, that's a lot. That's under 1 is a good deal, right? Generally. Now let's look at other EVs because we got to compare it to the EV space as we go. Tesla, price sales of 21. So AYRO is higher. Fair, fine. Lucid, look at Lucid's price of sales because they don't have enough. They just haven't reported enough sales. So makes sense. But it's expected to be higher in the coming years, right? Their sales. So that's why they can justify the price right now. Whatever. RIVN is another one. What's their price of sales? I mean, it's insane as well. So the thing that I'm looking at here is that, okay, this price of sales is high, very high on AYRO, but now this stock is coming down. It's a $73 million market cap. If we take a look, they had $77 million in cash and no debt as of September 30th. They're trading below cash with no debt, and they're an EV, and they just said in their latest report they're expecting record fourth quarter revenue numbers. I mean, that's a recipe to me, right? That's a recipe for a run in the next 3 months or so when we get that next report, if not sooner. It's a low float stock. Go back to this stock. Where are we at? Float-wise, where is float? 30 million float. Insiders own 2%. That's not really great. You want to see over 25, ideally for them to be kind of vested interest, but whatever, it is what it is. This is setting up to be one that it's tough to buy down at these lows, right? But it's something that I like. I mean, I think this is a really interesting stock down here, especially going into next year. I mean, come on. So again, it's like that's kind of a little, I guess, insight into kind of some of the DD behind some of these stocks. But I mean, come on. I mean, this is a bread and butter type of swing for me that I would love to be back into. So I mean, I got a quick list. Like when I start to see these things, I mean, I'm not doing this where I spread myself too thin. I'm going to try to focus on less small caps at a time, which is what I'm going to do, and be heavier in those. But if I get a run on SON, if I get one of my other small caps to run and I exit those positions and I'm looking for something, AYRO under 175, let alone under 2, I like. Under 175, please, yes, please. I'll take this thing for a ride back to the 50 SMA, 250, maybe dare we say the 200, back up to $4. I think $4 is a very realistic run for a price target for a run, 200 SMA, if this thing gets positive news or into their next earnings report when they're expecting record numbers. Now, hey, if they can't meet those numbers and they're not good, that's a downside risk. Yes, but they're also, the downside risk here, how much is that downside risk when you have no debt and you're trading below market cap, below your current cash standing? Now, of course, these stocks could go lower. They could, but the risk there isn't too bad, especially when they have a decent amount of cash like that. Again, your risk for offering is also lower. So what's your downside here? Letting this thing kind of float down with the market. But then your upside here is that within a swipe, this thing could be up 10, 20, 30%, right? It's a low float. So the risk reward starts to get very, very skewed into the long side direction here. If you're shorting this thing down here, especially below the lows here, we're below last year's lows. I mean, when you're shorting it down here, that's fine, right? Because they're ultimately, right, the algos, the bigger money, they're in control. So if they want to kind of keep shorting this thing down, then sure. The risk is if you get enough people on social media to come in against you and go along, well, then you can get squeezed. But for most small caps, if there's no attention on it, I mean, the risk isn't really that high because it's going to be messed with by market makers and big money. So they have full control over where this is going to go. And when they want to turn it around, they'll turn it around, but they're not going to tell you when. And the signs start to become a little more interesting, right, as time goes on. And so the volume picking up here is really one of those signs that I'm getting ready to kind of think, okay, volume is picking up here. Somebody's buying these shares. Okay, so, I mean, the stock's going down, trends down, but somebody's buying these shares. Who's buying these shares? I want to start thinking in that mindset and start looking on social media. Look on the Twitter. Look at Twitter. Look at how people are crying. The more people who are crying on Twitter, on stock twits, whatever, that are saying this is a piece of trash, this is that, that's the sign to start going long, start picking up some shares within reason, right? That's kind of how I see it. So hopefully that is helpful. But I mean, I like this thing down here. I really do. So let's see. Let's see. Is Son super risky since they have low cash? Yeah, I mean, it's certainly, there's always the risk there. I'm looking for the PR. The thing is, I'm kind of going under the interpretation, the impression they just did an offering back in here. I think like 80 cents was their last offering. So they recently raised. So chances are the risk of that raise again is going to be low unless they spike it. So unless they're probably not going to raise until they run this thing on news. So they're looking to get some positive news, looking for a run, and then when it runs, that's when they'll raise, ideally. Now, they don't have to do that, but that's kind of the way that I'm playing it. So ideally, I'm looking for that, and these stocks that going down to new lows, that's kind of the way to salvage them or save them. They get run up, positive news. Oh, cool, great, everyone likes it again. Oh, we'll do an offering. We'll raise money to keep us alive for another year or two, and then boom, and that's kind of how it goes. So, I mean, obviously, when you're playing these things, right, there's risk parameters. So I don't like to go now. I've restructured my risk a little bit. I don't want to be in over 15% on any one stock, right? So 15% of my account is the like max I'll be in on one stock roughly. And that's it. So obviously, one stock getting killed is not going to destroy my account. So that's kind of how I will play it. And sometimes, and many times, I don't never actually get to the full position size because I'm looking to accumulate shares at certain levels, or I'm looking to accumulate over time instead of just kind of buying all at once. So I many times don't really get the full size, but it is what it is. I don't personally like to average up. It's just not my style. For me, it just doesn't work that well. But, some people it might work really well. But for me, I'm not a huge fan of it. Let's see. OEG, let's take a look. I definitely want to look at that. I have some options out to the end of the month, I believe. OEG has support here at 225. It did dip just below, but it got bought up that day that dipped below, right above, which was very, very strong action. So even though it did have some weakness under that 225, it held up above and it closed here at like 245, which is great. And then it bounced where it bounced this past week. It bounced at 225, at 230 or so, right? So as long as it holds over 225, I like it. It's starting to show us signs of a curl. So look at this chart. I mean, had the crazy run and now it's kind of coming down, but now it's starting to kind of, you see that slope of that kind of down, starting to kind of change and starting to go more horizontal the past couple of weeks, really ever since like the mid-November timeframe. The other thing to also note too with OEG, if I pull it up here on FinViz, OEG has been littered with insider buys. So the CEO has been buying and not been buying in small amounts. Actually, let's go to Open Insider. OpenInsider.com. I'm going to go to OEG. This is a free site as well. OEG, let me zoom in. Open Insider, we have James O'Neill has been buying 250s, 258. And we look at the time frames. This is November, mid to late November, and so forth. So this also lines up with when the stock has been bottoming out. So he was buying like right in this range, the mid-November range, and so forth. So it really has been holding up and just consolidating. It really has been in a range from like 225 to 280, and then it's been back down and it's been back up. And that's what it's been doing. He's been buying a lot, though, in the 250s and even 230s, 228s he bought. But what's interesting to me here is that these aren't like a 0.5, like a 1%. Like these are decent numbers. So he bought, 20,000 shares, 100,000 shares, and then recently 100 more thousand shares, 111 more thousand shares. I mean, he's increasing his total position by 3%, 4%, 13% with just one buy. And then the most recent buy, he increased his total position, which has been growing as it is. He increased that by 10%. So that starts to show you that it's a little bit more, he has a little more conviction potentially behind these buys. If a CEO is buying and it's like 1% of his position, for example, I'll show you one right here. DPW, if I look at this, he was actually buying more lately. But like, for example, he was buying some 1%. Actually, ALZN is a better example of that because they have a lot. But like ALZN, for example, is a good one. Where, look at this, like Alt Milton, the guy who's a CEO at DPW, which now I think the ticker changed to, I forget what it is. I'll say it at maybe in a live stream this week. I'm definitely going to do a live stream, or at least one, maybe two this week during the market hours. But like increasing his position by like, it says 0%, because like when you have so much and you only buy like a small, like when you own 38 million, I mean, you buy 38,000, I mean, who cares? Right? So when you want to see like a decent size in terms of like relative, which is usually a good sign. So that's kind of what I like to look at. And OEG kind of fits that bill where it's like the CEO is buying, but it's not like he's buying 1% chunks. Another thing to also note, I was looking at ELYS too. ELYS, I want to pull this up too. Gold Street Capital is a 10% owner. So they own more than 10% of the shares, I believe. So they have like 4.7 mil in this thing, or at least 4.7 million shares, if I'm not mistaken. But they've been doing the exact same thing. But I think what they're doing here personally is they're doing this just to catch on the insider buy sheet. So the game kind of ran out because it didn't work. But they were looking at buying this thing in the 350s, whatever, 325 most recently. But they're buying 55,000 shares, 10,000 shares, 28,000 shares. In terms of their overall position of 4.7 million shares, I mean, it's not that much. Even go back to when they started buying, right, recently, right? They had a 4.5 million shares. So did they increase their position by that much? No. They did this because it would show up, as an SEC Form 4, because now all of a sudden 10% owner is buying and has to get reported. Now people know about it. Does it really matter? Probably not. And it didn't really work in terms of kind of, I don't say pumping it up, but sometimes if this stuff comes out in the after hours and it's like thin volatility, all of a sudden, some volume comes in, boom, the stock could be up 20, 30%. And they may be able to dump, a decent chunk if they wanted to, or kind of they can kind of excite some volume. So sometimes that happens. Back to OEG though. I want to see this thing getting up over $3. 367 is this is up to the 200 SMA. That's my target. So like 350 or so is a decent target to have. First target. And then beyond that, it could certainly go for more, but it's one that I'm watching. I like the chart risking down to like 225 or so. 2 closes below 225, and that's probably where I'd say cut it. But yeah, for now, I mean, as long as it holds up, I'm in. I'm holding some options, so I'm going to just be chilling with that. We shall see. How do you find catalysts? Okay, so when it comes to catalysts, simplest way to go about it, and there's a video too on the channel going over how to do some due diligence for penny stocks. There should be. I made the video a couple weeks ago. But the simplest way, like we just did for AYRO, the simplest and easiest way to go through, actually, I'll show you for SON, SONN. The simplest and easiest way, go to their recent press releases and boom, they're right here, like in a business update or a financial update or their quarter earnings report plus a business update, right? They're literally going to tell you this stuff. And so within the first few paragraphs, it'll start to tell you. And as we scroll down, let me see. Sana is pleased to provide the following updates, blah, blah, blah. Okay, let's talk about what they did throughout the past couple of months, whatever, cool. Here we go. They had 27.6 million in cash after the offering, this many shares, 60 million expenses. Okay, cool. Inside of this, they're going to tell you what they have coming up into next year. If I scroll through, sometimes you got to read it between the lines a little bit or go back to their most recent earnings report. So let's see this. They have on the 16th, they had a quarter business earnings update. I can pull up this thing right here and I'll look for some keywords. So for example, like I'll always will look for cash, see how much cash they had on hand. This is back into June. So they did an offering. Now they have much more. They have 27 million in cash on hand. And then I'll look for key things like I'll look for like 2022. If I can find anything with 2022, then boom, here we go. I pull up 2022. Okay. IND application will have to be filed with the FDA for both before the end of 2021 with an addition IND for this candidate during the first half of 2022. Boom, it tells you that right there. Those could be catalysts. Those are going to be PRs when they drop that. Those are going to be future PRs, right? When you see that ahead of time or when you see that PR comes out. So let's see, I'll go back in here. 2022, boom. We believe this positions us well for continued growth and advancement of our pipeline in 2022. Okay, cool. Now, are you going to advance your pipeline? So boom, they submitted this IND for the FDA. Will be submitted in the first quarter of 2022. Subject to the approval, they expect to initiate a clinical trial in oncology patients with solid tumors during the first half of 2022. That's a PR potential right there. Are preparing to initiate this, that, and the other thing, first half 2022. So boom, just like that, we have a bunch of catalysts, a bunch of potential candidates with PRs, and that we can look into some of these catalysts and look deeper into their products as we can go into the website. We can look up to what they're actually doing, competitors in the industry, and we can kind of see the market potential. And many times we'll have investor presentations that you can dive into as well on the company website. But that's a quick and dirty way to go through and start to see a quick way to do some due diligence, right? So that's finding those catalysts, right? Those are usually they'll give you like first quarter of this year or second quarter of 2022 or this quarter. That's a good way to kind of judge the catalyst. Let's see. I think about SQ. Let's pull up SQ. All right, this thing has gotten crushed as of late. Now, hey, I mean, a lot of these things probably need to come back, and this has come back to much more reality. So that's trying to bottom. It's trying to kind of build out a little bit here. As long as it holds up the recent lows, so a risk about $10 to the downside here. As long as it holds 157, this could be, your perfect kind of bounce curl zone, right? So let's see what happens. I think up to like that 192, $200 is not out of the question for a quick bounce. Be like risking yourself $10 down. So risk like 5% to make 15. I mean, 20 is pretty good in my eyes. But it oversold pretty hard, and it's had these kind of fake kind of consolidation curls. So as long as you have a stop loss roughly below like 157.57, as long as your stop loss is there, you're going to minimize your downside risk. You're not going to get caught in one of these flushes even further. TCAT is building momentum. Significance of a penny stock trading below cash. The significance there is that they now have the ability, for example, let's say, number one, you have low risk for offerings. And so when it comes down to it, one of the biggest downsides everyone looks at is like, okay, well, this stock is going to do an offering. They're going to dilute. So, okay, yeah, they're going to dilute. Okay, that's a risk. I don't want to be in that. And if they dilute, then it dilutes shareholders. So now my share is worth less, and I don't want to be in this if they're going to keep doing that because there's no value there. So you have lower risk of that, which is good. Now, if you back your way into trading below cash with catalysts in a hot sector, now that allows you cash or the ability to potentially to acquire something, to acquire a new business, to acquire somebody else, to acquire this, to acquire that, to go build out, a team, to build out this. So it gives you more kind of leverage. And then when it comes down to it, right, like it's also, okay, I'm trading this stock is trading less than what this company is valued at cash. So if someone was to acquire this company, right, or just buy this company, like you kind of have to think about things like it doesn't mean the stock can't go lower, but the risk reward for something like that with a future pipeline, if you're a biotech, or a future in a hot sector, for example, AYRO in the EV sector with growing sales, right? That starts to show you, okay, what is my downside here? How much further down could this go? It could always go down, but how much more could it go down if they're trading roughly at cash or below cash? And then what are my threats? What are my risks? And the biggest risk when it comes to penny stocks is usually dilution. It's usually offerings. So if you can eliminate or at least minimize some of the biggest risks, then boom. And also when it comes down to that level, if a company is increasing their revenue, they have cash, what's the threat of them going bankrupt? What's the threat of them not being able to pay their debt? Well, if they have no debt and they're trading, below cash value, there's a lot less threats of that stock being delisted unless they're under the bid requirements of certain exchanges. For example, like if you're under $1 on the NASDAQ, you'll have a certain deadline that says, hey, you're under $1. You got to get your stock up over $1 for 10 days in a row, or else you risk being delisted. Now, you could also just do a reverse stock split to get it over, and it's no big deal. But all of these things play in. So if there's minimal downside risk as the company going bankrupt, you have increase in revenue, you've got cash, you have low threat for an offering, that takes out and eliminates like massive, massive risk and speculation behind these penny stocks. So how much further could it go? When the market's red, the way it's been, it could go lower. But when things turn around, these are some of the stocks people come to first because it's like, wait a second, we've been missing this stock this whole time, and everyone's going to want to buy that thing when it's back up 20, 30, 40% from the lows. Just kind of the nature of how this stuff works. I don't even think I have, let's see. Let's go back to this. I haven't even pulled the webcam up. I didn't even realize. Shoot. My bad. Thing is, ARO is that that's true. They can have revenue growth, but their net income is negative because when you have expenses and you're paying your team, or there's expenses for research or this and that, then that's also the downside. So that's the other thing too. When it comes down to it, it doesn't mean anything. It's not like, okay, just because they're below cash, it's like the best thing ever. No, because if they've got expenses, they're going to be burning through that cash. So that doesn't matter, right? They're going to have expenses of whatever. You go back through and look at like AYRO's last quarter, okay, or look at their last year. How much did they pay? How much were their expenses? And so how much are they going to, what's their cash burn rate? Are they blowing through cash? Is it 10 million a year? Is it 10 million a quarter? That will definitely be a determining factor, because if I'm buying this thing and their cash burn rate is 10 million a quarter, well, their latest earnings was a couple months ago or whatever, every month, that tells me they're going to be burning through X number of million of dollars of cash. So this cash level is coming down. And so if I'm going to hold this stock, I got to have a rough timeline of, okay, when this cash gets below this level, I don't know if they haven't progressed on this, and the stock hasn't moved. I don't know if I want to hold this anymore, because now the threat for an offering goes up. The threat for them having to raise again needs to go up. And so that's the type of risk. Or the threat for bankruptcy goes up if they now have debt, or a stock has this or has that. Now, AOR, I don't think has any debt, but that's an example. So just because they have cash doesn't mean that they're not paying to run what they got going on. And a lot of times these biotechs, especially these biotechs, they're going to keep paying and they're going to keep funding, but like they're not going anywhere. They know their products are never going to make it. They know this is not going to work. They know, like, the grand scheme, it's just like an endless kind of money pit to pad their pockets, right? In a sense. I love BW a lot. I love this one a lot as a clean energy play. Look at that. Look at that curl. I was looking at this one last week and I was like, yeah, I was just going to check it in because I had this thing from like 6-ish to like 10 plus, and it was awesome. I think this one, when this thing breaks back up over 10, I think it's going to go for a run. I think this should be a stock trading at like $15 a share, but it's kind of my target area to have on it. So I like it a lot. Got to get back over 10. 950 was a key level, so we'll see if there's resistance there. Held the 200 of the 50 SMA very nicely, so very nice momentum, super strong. Volume has been there, so I like that play. Low flow IPOs, they're like they're volatile, right? Like AHI. Let's say like AHI. Personally, it's tough for me to trade these things because, okay, I understand you're playing for the pump. Buy the easiest way is just buy the dips, right? On these, the problem with some of these is that you're playing for pumps. You're playing for like, I don't know. But look at some of these other IPOs, some of these other like recent low float IPOs. Like, for example, look at like Dbtx was an IPO. Let's see, Dbtx. Now, did it IPO at the best possible time for some of the low floats and small caps? No, but actually it didn't. Not a bad time. It IPO'd up in February. Okay, so but ever since then, look at this thing, 24, and it's just been. That's one of the downsides. You know, if you don't get that pump initially or early on, you know, you could kind of fall into one of these types of traps, and the next thing you know, you're bag holding for months. And maybe it runs, but maybe it runs in 6 months from now, and so. It's the risk. I'm not a huge fan. I like to let things kind of play out. I like when there's more chart history. We get a better feel for the stock. There's more history behind the company. We can kind of see what they're doing, cash position, earnings, this and that, and then you kind of get a better feel. I like, if there was one that I like, it was Beat. Beat down here, yeah, what ended up happening here happened on Beat. The thing got kind of hit down. It's a low flow IPO, super low flow, market cap of 26 million market cap. They're in the heart cardiac space, so there's potential for PRs there, pretty big industry as well. So there's potential for products and whatever. But the thing with this one is that this thing went down, hit a new low of 275, and then immediately within the day pumped 30%. Now, it didn't pump until there was some social media attention on it, some chat rooms and whatnot got behind it, started playing this one, and that's what brought the volume in. So until you get that, like, you see what happens is that this thing could easily come back down and go to like $2 before it gets pumped again. You know what I mean? Like, so that's the kind of the risk, is that you play these things are being played for the pumps. And so when the pumps come in, you know, it brings in this volume, it pumps up a little bit. You know, somebody who bought this thing and then pumped it or then talked about it, then sent it out to their followers, they made money because they're in from like, sub 3. And yeah, maybe they hold it for a bigger move, but you can almost guarantee they're not going to be selling this thing for a loss. So, before it comes back down to their average, they're locking in gains, they're locking in something, and they're going to cut it off, 5-10% at minimum higher than where they bought it. So they're not going to lose, right? That's kind of how this stuff works. So personally, I haven't been a huge fan of them, but that could change, right? If things start turning around and all of a sudden we start noticing there's a clear trend and these things are all running one by one, then I'll be back to some of these. But personally, for now, I'm kind of just letting it do its thing. And if they run, they run. But, whatever. Quiet period ends, their PRs. Yeah, that's the other thing too. When the quiet period ends, they drop PRs, and then that can pump things up hard, which is a lot of fun. That's what I like to do. That's how I like to play a lot of my penny stocks, to be honest. So let's see. STRN. Let's take a look at STRN. Better example. Yeah, this thing had a little pump, right? Pulled back huge, and then ran up to 7 almost, right? So now it's kind of consolidating. As long as this thing holds up in the 5s, or near 6. It looks strong, so we'll see how that holds up. Let's see. Tesla or PFE. I do want to kind of go over to those. Let's look at some of those. We've been looking at small caps, so let's go over to some big names. Tesla is trying to break out of this kind of range. Let's see. We have this little downtrend. It broke out of that. It's at a key level right here. 1,060 is kind of key. Strong market. This thing can be back up around 1,100 pretty quick. So this could be kind of your, quick dip back down, filled the gap down on the chart, back down to a prior area of prior resistance, 900. It dipped just below 900, and then boom, bounce. Very, very nice. It looks strong. I want to see it pull back a little bit, but it does look strong. And so I really want to see what happens this week on Tesla. I added some more money to my IRA, and I was going to buy more Tesla, but I didn't buy it. I was ideally, looking back, I should have bought it when it was in this gap fill range. And I was like, no, maybe it pulls back more. Maybe it gets quiet for a little bit. Maybe the market pulls back a little further, and then I'll buy it then. I missed the opportunity. It is what it is. Okay, whatever. PFE. Pfizer. This could be a bull flag, because you kind of have what you kind of got right here is like a rough, it's not perfect. I'm not drawing a perfect flag here, but like you kind of have your pole right up to the upside, you have your pole, and then you kind of have your flag developing, and then you want to see a breakout back to the upside. Now, if it breaks back to the downside, you got support down around 51, 52. That's kind of a key area that I'd be watching. Also lines up, if I bring this box across, boom. This area lines up with the prior highs. So I will be watching that level if we do want to see more, if we do see downside. And then when I say downside, if we see this thing closing, let's say under $58, one of these days this week, that doesn't look good. It could kind of save itself, but under that, it could drop down to the mid 50s and even lower. But if it holds momentum, volume's been there, this could go for more. So we shall see. I'm not a big fan. I am not a huge fan of Moderna, but mRNA, because it made such a freaking run. Let's see. mRNA, I mean, it is looking weak as heck. Any positive PR for vaccine stuff, any of that stuff, it just seems like there's weight. So my gut, now of course, sorry, I'm trading off a gut feeling, right? But my gut tells me any pops, buy puts. Give yourself some time. Now, play it with size, play it accordingly. But I like to short any pops. I think this is coming down sub $200, and I think it's there to stay in 2022, especially if we start to turn the corner with the pandemic. And also, not to mention, Merck and Pfizer have the COVID pill. So, not saying that vaccines aren't needed, but I'm saying that I think that is going to start to draw some attention to those stocks potentially. And so I will see, but people necessarily getting vaccinated, right, and numbers coming down is probably going to leave less volume with mRNA. And I can tell you right now too, this thing has been littered with insider selling. I mean, let's broaden this out. Look at the past couple of years. I mean, here's the chart, right? Since like 2019, sorry. I mean, the thing is up massive, but I think it's getting pretty weak. And I think this trend that we're kind of holding right now, we're roughly here, if it falls under 240 and closes under 240, that cracks this trend we've been seeing the past couple of weeks. And I think this thing will be down in the sub 200 range, within about a month. That's my guess. My chart based guess. It just looks weak, and I don't want to be touching this thing on the long side right now, unless it's for a day trade, and that's it. Playing off. Okay, the thing is down 10%. It's starting to curl back up. Okay, I can play. I can see that. But if it's personally, I wouldn't want to be long here again until that sentiment changes. But for now, we also have a downtrend right here. We can even probably draw kind of. Let's see if we connect that. Yeah, kind of. I mean, kind of a downtrend there. So here's your kind of key. Breaking back up over like 335, 325 would be the break back up over that downtrend. 350 will be a key telling zone on that. I mean, I'm hoping Tesla goes down so I can buy more too. I mean, yeah. So personally, let's see. I keep hearing good things. PFE. Yeah, PFE, that's the thing. But they get the pill. So the pill is essentially if you have a severe symptoms of COVID, right? You can take this pill and it will reduce, I think it's like 90% from what I saw. I read like an article. It was like 90% effective at reducing severe hospitalizations, severe, I guess, excitations of whatever symptoms, So it seemed pretty promising. I think you take I forget how many pills. You take like 3 pills a day for 10 days, And apparently, like, it's supposed to keep you out of the hospital, or at least, minimize some of those the side effects and some of the big time, negatives that those who've had, existing medical conditions, existing issues, or struggle with the illness, right? It's helped. So that's very promising. And people are much more, I feel like, people are much more willing to go take 30 pills over the course of 10 days than to get a shot. It just seems like that's what it is. People would rather go to CVS, get their pills, and then take their pills at home, and that's it. Then, rather than getting injected with something, right? So I guess, you're putting something in your body either way. I guess I see both sides of why someone would like the pills, why they wouldn't, the vaccine, why they would, why they wouldn't. It's a one and done. I don't know, but teach their own. But it seems promising in terms of what's going on there. So we'll see. Let's see, Affirm next week. What am I long? I actually, check out yesterday's video. I have a video every single Saturday going forward, or I've been doing it for like a year plus. Every single Saturday, trading stocks to $100,000. That kind of series is a full playlist, and every week we update the portfolio, we're holding, all that good stuff. So that is that. I'm going to look at AFRM, and then I want to pull up futures, and then we'll see how things are shaping up here. So Affirm, hey, if Affirm holds up in the low 90s, it looks decent. Over $100. It had a decent close on Friday. Over $100. Let's see if it gets over 105. That would be very nice. But you kind of have you got your downtrend here. Affirm, I'm very glad to see this. I'm very glad to see that Affirm pulled back because it needed it. It really did. The thing went nuts. Now, I remember I had this thing. I drew this line in here. I was like, I kind of like this for a swing. And I had it. And then I ended up selling it. I forget when on a little bit of a pullback. And I missed some of these runs, which was my bad. But hey, you got to have patience, right? So Affirm, right, if it can hold the low 90s, which it seemed to do, and if it breaks back up over this downtrend, which I want to say like 105 is kind of like the level. If it closes over 105, good. We can be back up towards like that 125 with momentum pretty quick. If market's green, we can be right back up into that range. So I would like to watch for one of those types of moves on Affirm. I'll be watching that. That could be a stock I look to trade this week. We'll see. But if the market looks decent, which speaking of the market looking decent, let's take a look at what the futures are saying. Let's refresh this page and see what we got. Okay, so as we started off, tech was up about like 0.3%. Now it's actually up only 0.18. So the futures have come down a little bit. Small caps down about 0.15. They had a good week last week. We'll see. But again, these numbers can change overnight like that. So as we speak, looks like the Dow is even. S&P up a little bit. NASDAQ up a touch. And then small caps, Russell is up down a little bit. But that's what we have for you right now. Hopefully this is helpful. If you guys want to go back and watch from the beginning, we talked about a bunch of stocks here on this stream. We talked about the market, talked about the updates, SPY, the S&P, what to watch, talked about some Bitcoin as well. Hope that was helpful. Hope we got some good stocks. I'm going to do some more lives this week during the market hour, so stay tuned for some of that.